Larry Fink and Rob Goldstein said in December to The Economist that ledgers haven't been this exciting since the invention of double-entry bookkeeping. For context, it's the accounting system developed by Italian merchants in the late 13th century, over 700 years ago, that records every financial transaction twice, as a debit in one account and a credit in another. I bet it sounds familiar. On one hand, we have CEO of the world's largest asset manager, over $10 trillion AUM, being that excited about blockchain and tokenization. On the other, we have to ask the question, who even wants tokenized RWAs anyway? And today, with my lovely panelists, Nicola, Christian, and Evan, we are going to answer that question. So please briefly introduce yourself and help me with filling out the sentence. The strongest real buyer of tokenized RWAs today is because, Nicola, why don't you start?
Well, if we're starting with double book entry accounting, the panel can only go up from here. So my name's Nicola White. I'm the VP of crypto institutions at Robinhood and also the GM of Bitstamp, which is our exchange product. I've spent 2 decades in traditional finance before this and then made the move over to crypto, primarily because I was really enticed by the technology. And so, Marcin, to answer your point on who's using it today, I think we're seeing mostly institutions use it today in terms of RWAs, specifically around tokenized money market funds and really more efficient use of collateral. And that's what's been the main driver, but really excited about what's coming next, which is tokenized equities, whether it be public or private, and also various other use cases from art to real estate. I know everybody's not very excited about real estate today, but I think longer term, those are some of the things that we're talking about.
Beautiful. Thank you. Christian?
Hi, my name is Christian. I'm heading global go-to-market for crypto for MasterCard. Been with the company for 14 years, so not crypto native by definition. Started my career in traditional finance and then moved to technology. Back to your question, I would agree it's an institutional play for now. And I hope that it sort of moves into more mainstream consumers, and we will cover that in the panel, giving more optionality and choice, what I can spend, what I can borrow against, yeah.
Beautiful. All right, Evan?
Yeah, Evan Ouyang, president of Animoca Brands. We are an operating, investing, and advisory company in the Web3 space. We're known for gaming as a start, but we're no longer just in gaming. We're in multiple verticals, including AI, DePIN, RWAs, and many other sort of verticals. Now, if you ask about RWAs, I'll dive straight into it and basically to say that the use case with RWAs is yet to come, meaning that the adoption, yes, institutions for now, they're preparing for it, but it is really the time right now to reimagine what the future looks like with RWAs. When you talk about sort of like, the ledger and all of that, blockchain itself is just a ledger, right, ultimately. But what it does is that through the blockchain, you're connecting global liquidity. That's the meaning from it. Now, the most important thing for an audience to understand is that there are a quarter of the world's adult population that are unbanked. This is the time, alongside AI, to connect the world, right, with investing. There are private credit and there are investment instruments all over the world that are inaccessible completely, right? With this, what we can see alongside AI, the agents that you can deploy into it, the chain that puts you in the wallet, it connects the language of investing together. That actually puts and democratizes financial access, right? And also, you talk about 24/7 atomic settlement, liquidity alongside stable coins. Then what you get is that you can actually invest 10 Hong Kong dollars and get a yield on an hourly basis. That's deeply, deeply meaningful to us, and that's why we're in the space. We can go a lot more into it, but this is about onboarding the masses. You're talking about billions of people being able to use your bank, which is your mobile phone, in the future, and deploying AI agents into it, and it's going to be a touch of a button. Everybody can do it.
Fantastic. So we have 2 institutions and 1 global distribution. Maybe let's ask our audience, raise your hand if you're holding or has ever held any RWA in your wallet or any account. Okay, so we can see it's probably like 10% of the audience, which shows probably like the institutions, at least for now, are the current players and the global distribution is here to come. So I believe we had these three phases in tokenization. First, stablecoins, tokenizing the dollar and global currencies. Then treasuries, we've seen it with BlackRock Biddle, Vanek Vibil, and many other aspects out there. Now there is private credit, stocks, and many other categories. Which of those show real demand in terms of like pull or push? Is it commodities, real estate, as you mentioned, invoices, trade finance? What are you the most interested in 2026 and years to come? Nicola.
I would say, right now what we're seeing from our clients in terms of demand is definitely on the tokenized stock side of things. So about 6 months ago, we launched our first tokenized product, which was tokenized listed equities in Europe. Europe was a really great jumping ground for us because there was clear regulation that allowed us to start offering our clients multi-assets in the region. So, we had a crypto license. It really allowed us to expand from not only crypto, but to listed equities and ETFs. And it also allowed us to break down barriers, right? So, European clients had a hard time getting access to US equities and that type of exposure. And this was a really easy way to do that. It also came along with many other benefits, from fractionalization to 24/5 trading. A lot of our customers get home from work and want to invest. They don't want, and traditional markets are closed. So having the ability to offer them that liquidity outside of regular market hours was really important to us and continues to be important to us as we look to move to 24/5. But I think that was definitely more of a pull than a push use case. And I think you're seeing that also with private equities. We know that there is massive demand in the market for retail clients in particular to get access to private markets as companies start to stay private longer. And so those are kind of some of the use cases we're seeing from a pull perspective.
Excellent. So trading stocks over the weekend, for example, which is like a great use case. Christian?
I think and as MasterCard, you wouldn't be surprised that we typically come from a payment angle of sorts, right? And we see that the ability to either use all sorts of digital assets, and typically at this point would be financial assets, so it wouldn't be tokenized real estate or art or anything, but the ability to say, okay, I want to put down stock or Bitcoin or Ethereum and I take a fiat line of credit against it and then I can use that money to spend it. I think that is very interesting and that was not possible before. And with all, very automated liquidation methods, you can make it, nothing in life is risk-free, but you can make it almost risk-free. And then I think what is also really exciting, or the way there is exciting, if I have some very risk minimal yield bearing assets like tokenized money market funds, when there's a market where I can, basically liquidate them in real time, spend them via card. So that could be very interesting, complementing what we have today in terms of, spending stable coins. But then again, I think the market is not there. In the sense that, I can offer them immediately. I still have these time delays. So it doesn't feel we're there in terms of I tap my card, money market fund is sold and I essentially spend stable coins. So that's still ahead of us. But I think that is very interesting because then, again, we can offer optionality and choice, what people want to spend, what they want to borrow against.
And we've come so far in the payment side of things. Yep. I think people still forget that we're very reliant on the underlying rails. Like if you have a tokenized money market fund, treasuries still settle T+1. Yes, you can get T+0 settlement, but not after 1 p.m. Eastern. So yep. I think we've come a long way, but there's still a lot more to go as the underlying rails need to come along for the ride too.
Yeah, beautiful. Making it more efficient and truly globalized from the get-go. Evan?
Yeah, I agree with Nicola. We're the first innings, right? If we're talking about RWAs, talking about trillions of assets going on-chain, which is inevitable. I think this panel obviously believes in that. We're really at the first second of a 24-hour day. It's literally that early. Now, if you look at the direct answer to your question about what's being bought today, it's really money market funds that are on chain because it's easy, and the other one is a home equity line of credit by Figure, right? I mean, a lot of the RWA market is figures out, it's a very simple private credit kind of instrument. You have a track record that's natively on chain, and the reason it's so sort of that's a dominant asset right now is because they've been early, right? And obviously, Animoca is a partner to Figure, and we believe in sort of Mike Cagney's vision in distributing these assets, right? But if you go forward, what's going to be interesting is that there are lots of players. Again, if you look at even just around here in this part of the world, Chinese players looking at the RWAs, right? And we're looking into, obviously, here in this region, at some point in time, there'll be stable coins issued as well, right? And that would connect the rails of RWAs into sort of what are investable assets. And a lot of players thinking about a lot of different differentiated assets, right? Now, what is interesting is that, people think about stocks, bonds, and real estate and all of that can come on chain that would connect global liquidity. For example, somebody in Japan can seamlessly purchase something in Hangzhou real estate, for example, if you really want that seamlessly, right? You can do that, but there's a lot of underlying rails that needs to be created in order for that to happen, in order for a seamless transaction to happen. We're not quite there yet, right? But what is going to be very interesting are actually not just these assets, the assets that people actually have some passion in collecting. For example, Animoca has tokenized the Empress Katarina, which is a $9-10 million instrument, and over time that instrument actually appreciates over time because it's a piece of antique, right? You fractionalize it, it becomes an investable asset, right? And you get participation. And people get it, right? People who are in music may not get Bitcoin, but they get sort of why you invest into that. There are other cultural assets that can be invested into. You can invest into football clubs, right? You can invest into basketball teams, right? For share of that profit. Again, the regulatory rails, once they come in, because people feel that passion, you can also do things like concert tickets. Individual concerts are being tokenized. It's just this whole asset class is coming in. It's well beyond just traditional financial assets, right? And the wave is coming, right? And we haven't even gotten the AI yet.
Yeah, I haven't gotten even to the AI yet. That's a good closing over here on that one thought, because technically you can tokenize everything, right? At the end of the day, it's a question about utility and also making sure that what's actually been on chain is helpful for the clients. As striking statistics is that 60% of currently tokenized RWAs are the yield-bearing versions. So the stocks, forex, and many other categories are still to pick up. But I do believe there's going to be a very strong demand in those. With Redstone as an oracle, we usually look at the pricing and how the market is moving on the traditional race versus off-chain. Because when you look, for example, on the gold price over the weekend or silver commodities, then naturally you can have discrepancy of specific tokenized asset versus the underlying commodity at large. But we are privileged to have 3 speakers from different parts of the world, Nicola US, Christian in the Europe, and Evan in the Asia. Looking at those regions, like which one do you believe is going to see the biggest pickup of tokenized assets and why? Is it going to be some regulatory limitations or maybe facilitation, or the users are going to be more awaiting this tokenized asset in specific categories and countries? What do you think?
Well, I mean, as the U.S. resident here, I would say we're definitely taking up the rear of the pack. I think, as like everybody has probably mentioned this week, we're still waiting on clarity to make any real kind of progress on tokenized RWAs. I think, from a European perspective, there's been a clear path for years now, so that's been a natural place for us to kind of jump off in our tokenized offerings. And Asia, I would say, Evan probably knows this better than anybody, but led the pack originally even before European regulation. So we have a lot of work to do in the U.S., but I'm excited about what could come and what we could unlock. But yeah.
But I believe Robinhood has been also very interested in Europe, right? Like when you did the whole announcement of the tokenized stocks last year at FCC in Cannes, that was in France, right?
Yep.
How do you look at US versus Europe in that regard, like in the coming months at least?
I think that Europe is a really great place for us to kind of stress test what we're doing for our clients, really work out a lot of the various operational issues along the way. So for us, it's been a great place to kind of get involved and get used to the product and really, get ready for hopefully, if you look at Polymarket, I think There's a 60-something% chance that clarity is going to pass. Hopefully that is true. I think the market could use a little bit of positive news these days. But yeah, I would say Europe's been a really great place for us to work through some of the operational issues, make sure we know how to scale the product for when we have our US launch.
Beautiful. Christian?
I would agree. So Europe feels most mature when it comes to the regulatory framework. But then I think if you want to move the needle in financial services on the institutional side, quite likely that's going to happen or continue to happen in the US, right? So this is where, a lot of the relevant players sit. This is where a lot of institutional capital is allocated. So again, from our side, we see Europe being advanced, but very curious to see what's happening in the US once clarity is there. Asia also very interesting, but if I compare it to Europe, where you essentially have 400 million people living in a single European payment framework, where you have portability of licensees, both on the traditional financial side as well as on the crypto and digital asset side, it's just a very homogeneous market. So if you're like a company like Robinhood, Bitstamp, you go in there and essentially, out of Slovenia, you can speak to everyone, right? From Portugal to Poland, right? So I think that makes it a lot easier, yeah.
Yeah, like being a Pole, I can tell you that access, for example, to tokenized T-bills or stocks in the US is not so straightforward. I'm a user of Robinhood, for example, and I'm very much looking forward for the further expansion on that side. Evan?
Yeah, I mean, let's be clear, right? The capital base is in the US, right? And also, traditionally, for years and years, the capital for innovation, right? Not only Silicon Valley, but in New York, so a lot of great companies come out of the US. That's always going to be relevant. Now, that's sort of, I would say that US is a giant that's been awakened because of the new administration looking into it. People might have criticisms about how it's being done, but overall, the trend is about being regulatory friendly, understand how to regulate it. So that's the part that's really real about it, right? But in terms of sort of, if you talk about domiciles that are credible, obviously US, different cities, I think New York, that hub is going to be very important. But if you look at other places, Hong Kong is a very credible itself right here, right? Because of the regulations, all of it's coming in. Especially think about RWAs and Hong Kong as a capital window for China. So Hong Kong needs to be the center that facilitates the capital flow. That's why everything moves through Hong Kong. And Hong Kong is also becoming one of the hottest IPO markets. It's sort of everybody's saying Hong Kong is back, which is great to see everyone here as well. And also Singapore, right? Singapore has always been very thoughtful about regulations, about stable coins, about their share of RWAs as well. Good financial center. But we haven't mentioned Middle East, right? That is very important as well because there you got sort of what I would call there's not as much baggage in terms of it being the most important financial center in the world. So it's always competing for that part of liquidity. Ultimately, it's about which domiciles captures that liquidity. Now, Dubai has already captured a lot of talent, and ADGM on Abu Dhabi side is really becoming that center that has that thought leadership that other regulators look to, right? It's very important. Now, I don't know where Europe is going to be, honestly. Obviously, always thoughtful in regulations, but liquidity innovation, always sort of, from my perspective, come on, let's go faster, right? But of course, you have great talent there as well. But this is ultimately looking at sort of the convergence of innovation, of sort of where liquidity is going to be. But ultimately, we have to think again, a little bit differently, right? I mean, I talk about reimagining the future, right? When we think about that, it's no longer really about the domiciles that matter, right? It's about how do these regulations actually converge in a way, right? Now you don't even have stablecoin regulations that allow cross-border trade, right? So that needs to happen for RWA to happen well as well. So the future really, when it's connected on-chain, will be more in a decentralized manner, not necessarily through centralized exchanges, right? That's a world where you can see lots of AI agents being deployed onto it, and you really allow for financial inclusion in that kind of a construct.
But I think one of the things we have to do is we need to work with regulators, because if one of the things that we're seeing is regulators try to bring some of this onshore, right? So whether you're a European stablecoin and you need to hold the cash in European banks, like those are the things that kind of limit the cross-border, payment nature, right? So we really need to work with regulators to educate them about why it's so important to be able to seamlessly move money across borders.
Really interesting. So my take is, on one hand, we have globalization everywhere around. Spotify, Netflix, we use the same apps. We eat the same food, pizza, sushi, kebab, and so on. But finance has always been segregated in those silos, like in countries. In Europe, oh my God, like we had so many currencies. Right now, at least we have euro that is somewhat unifying. And one thing about regulators I'm very curious about is to see what's going to happen when we are going to see the first bigger failure. And to bring you something to your attention, maybe not everyone has saw this fat finger issue, when Paxos mistakenly minted $300 trillion worth of PayPal USD, PYUSD, during an internal transfer error. The amount was nearly twice the size of global GDP and was burned after 30 minutes, right? That was like exactly the fat finger problem that sometimes we see in finance. How regulators are going to approach that, right? Because it's a very much according to the book, stablecoin issuance. Okay, now going strictly to your areas of expertise. Nicola, we had some interesting news about Robinhood Layer 2 today. This chain is explicitly created for tokenized asset issuance and DeFi compatibility. How do you see institutional RWAs actually converging with DeFi, like Morpho, Spark, Aave, and so on? And where does the convergence break?
Yeah, that's a great question, and I think from an institutional perspective, we're really just starting on this journey, and so there's a lot of education that's going on, right? You have institutions that have been steeped in processes and procedures for decades, and we're really trying to get them to jump to what the next level of technology looks like and innovation. And so I think where we're going to start is at the infrastructure layer, right? What are things they can get comfortable with? They can get comfortable with on-chain issuance. They can get comfortable with DVP and atomic settlement, right? Things where they have risk in the market today and they're really looking to reduce that risk. I think where it's going to take a little bit longer for the two worlds to converge is definitely at the application layer. So right now, institutions are used to KYC and AML and strong controls around compliance. I think that's a place where it's going to take them longer to get comfortable with what the DeFi world looks like. And one of the places where we're going to just need, better technology, better infrastructure, we're going to need to bring some of the learnings. I mean, look, there's been a lot of mistakes made in traditional finance and in crypto, to your point. We need to bring some of those best-in-class controls to the space so that we get rid of some of those fears that they have about this DeFi space, and we actually teach them about the benefits and the efficiencies of the product.
So do you believe this year I will be able to go to Robinhood chain and borrow USDC against my Tesla stock, or it's not going to be there yet?
Well, we just announced testnet today, so we have some work to do. That's definitely our goal would be that we're able to offer tokenized assets on the Robinhood chain. You're able to essentially pledge those assets as collateral, lend against them. But early days yet. Today's day one that we announced testnet. So if you're looking to build on Robinhood chain, it's out there for you to do it today. And there's going to be a lot more announcements about what we have planned later in the year.
Beautiful. We'll definitely monitor that. Christian, MasterCard is a huge company, $450 billion of market cap, as I checked recently. Actually, it's almost twice as much as Ethereum market cap right now, as a fun fact. It touches 3.5 billion cardholders. Here's the real question. What does an ordinary person actually get if MasterCard puts tokenized asset on its network, better yield on savings, or maybe instant international payments, lower fees? What's the most important?
Wow. Yeah. So I think one important thing is to notice or to point out that nobody cares really how they pay, right? It's just you have to do it, right? You want to buy something online, you want to split a meal with people, and you just... Today, the best-in-class user experience, you have a card sitting on your iPhone or your Android and you just pay it. And people typically don't even have to worry about, what's happening in the background. And I think that is, a core belief that needs to inform what we also do in payment when it comes to using digital assets. However, if as a consumer, I, going forward, have the ability to say I'm in my Robinhood app or whatever, and I can say, okay, place first, deplete my USDC, EuroC, whatever, all my stable coins, and then if I should run out of money, I don't want to spend my Tesla stock, but I want to take a fiat loan against it. Or I want to, all the money that I have that I don't need right now, I put it in a tokenized money market fund. But should I want to spend it, I want to be able to spend it. And even today, if it's a tokenized money market fund, I wouldn't be able to spend it because settlement would be, T+1 or whatever, or T+1.5. And our mission is essentially to work with industry partners, whether it's wallets, exchanges, fintechs, banks, to give consumers more choice, what kind of assets they want to spend, what kind of assets they want to borrow against, in order as to use the global MasterCard payment network for safe, simple, secure payments. And in that sense, for me, crypto is just an extension of fintech, right? Fintech was the first time when we tried to make banking and payment a bit more like, you mentioned Spotify and Netflix, where before it felt a bit like a fax machine, right? And this first generation of fintech, I think, was a trailblazer, putting user experience, mobile first, at the center of the discussion. And today we are at a point where the very essence of money or assets can be digitized, and that opens up a whole lot of new opportunities, what we can do with that. And then it's not for us to basically determine what you should or should not do. As long as it's compliant, safe, and secure, we will offer it, or we will work with companies that offer it. Because again, nobody has a card issued by MasterCard. It would be a Robinhood card, it would be a Revolut card, a Deutsche Bank card, or whatever. And then all these players out there, like an Animoca card, obviously, they can choose what they want to build in this global framework. So I think that's a bit our strategy, if that makes sense.
Beautiful. I think there's also a strong statement I can share over here as well. In 5 years, every fintech company is going to be crypto company. Like every Rails, maybe not go ultimately only on chain, but both of them are going to interact like seamlessly with each other. We are going towards the end of the panel, but Eva, I still really want to hear your voice on Animoca invested over 600 blockchain companies, and now you're expanding aggressively in stablecoin and RWAs. What does a regular consumer actually want from tokenized assets that they cannot get from traditional finance currently?
You don't get the access. You don't get a brick bulk, right? We talked about this earlier, right? Robinhood's going for what's obviously stocks and the assets that you have on chain. MasterCard trying to connect the payments using blockchain rails. I mean, right now you get a problem where banking is essentially inaccessible, right? We have moved again from sort of fiat-based money from cash to digital wallets. Now you gotta, like, we're in this part of the world. Hong Kong used to use credit cards, and people complained about taxis not having electronic payments. You go to China, you don't even carry your wallets. You pull out your wallet and give them cash. People look at you funny, right? It's all electronic, and whatever amounts you have left in terms of on your digital wallet, you can invest it, right? It's already completely digitized, right? And that's part of what it's kind of like leapfrogging in a lot of ways, right? Now, if you look at the future, your wallet is going to be on chain. It's going to be on your phone, right? And KYC will be on decentralized ID, and then you have 10, 12 agents doing different things for you. Copy trading, right? Accessing private credit markets, accessing the new Dubai real estate, tokenized real estate that in that good area that they're in, right? So the world needs to be reimagined in this way, right? And finance is reimagined. I think a lot of banks are now getting into the space because there's going to be a big disruption. Even for banks, ultimately, it's about the cost, right? Atomic settlement 24/7, other than T+2, that is ultimate pool. Ultimately, I would say I'll conclude with this, right? Why is there going to be adoption? Why do we believe in it? Why are we going to the RWA? Because it makes sense. ultimately, if you just look at nothing in terms of accessibility, look at the transaction costs associated with using blockchain rails for settlement, the access to customers you otherwise have. This is just ripe for disruption. If you look at the internet in 1996, right, you're like, okay, there's no one there. But even like today, you can't leave home without your mobile phone.
Beautiful. And I think that's a fantastic closing statement. Tokenization lowers the cost, increases accessibility, and makes assets 24/7 all over the world. And ultimately, everything is going to go there. And we are going to work next years to make that happen and in reality globally. Thank you very much for that panel, and thank you for the panelists.